What would need to break before the yuan replaces the dollar? Start with today's baseline. Many global contracts, especially commodities and shipping, are priced in dollars. Central banks hold dollars as reserves for stability and crisis response. Banks also borrow and lend in dollars for global funding. Cross-border payments often route through dollar-linked rails. It is not one thing. It is a stack of habits, contracts, institutions, and infrastructure that makes dollars convenient. Replacing the dollar really means taking over three separate jobs. First, pricing, being the unit of account on invoices and long contracts. Second, transacting, being the medium of exchange that settles the deal. Third, saving, being the store of value investors trust in stress. Inertia is powerful. Firms invoice and what partners accept. Banks prefer currencies with deep hedging markets. Investors choose assets they can sell quickly when conditions turn. Breakpoint 1 is trust. The dollar benefits from confidence in property rights, contract enforcement, and predictable rule of law standards. It also relies on credible monetary policy, meaning inflation is managed without political shortcuts. For switching costs to fall, markets would need repeated reasons to doubt those pillars. Think persistent inflation mismanagement, a fiscal path seen as politically unfixable, or governance shocks that raise default or capital control fears. These are conditions, not forecasts. Breakpoint 2 is plumbing, the machinery underneath the system. U.S. Treasuries function as widely trusted collateral. They support short-term lending and day-to-day liquidity, including repurchase agreement funding. When this runs smoothly, institutions can raise cash quickly and predictably. If it repeatedly seized up, confidence could erode. Another pressure is sanctions risk. If more countries expect access to dollar channels can be restricted unpredictably, they may build alternate routes, even while still using dollars. Breakpoint 3 is what the yuan would need to become. Broad adoption requires that money can move in and out more freely. Large players need convertibility at scale, with deep liquidity when markets are stressed. Users also need reliable investor protections when disputes arise. Reserve managers prefer transparent monetary and fiscal frameworks, so policy surprises are less likely. There's a trade-off here. Tight capital controls can support domestic stability, but they limit usefulness as a global store of value. Putting it together, the yuan is unlikely to replace the dollar unless several breaks happen at once. That means meaningful erosion of U.S. credibility and institutional trust, plus repeated dysfunction in dollar market plumbing, plus major upgrades in yuan openness, convertibility, and legal protections. A more plausible path is partial and uneven. More yuan use in regional trade settlement, more bilateral payment channels, and a more multipolar reserve mix where the dollar stays largest, but less dominant. That is the recap. Watch conditions, not headlines.